pre-GFC, when you just didn't have this ludicrously cheap debt, companies couldn't string stuff out nearly as long as they could post-GFC, right? So all these problems that you knew you were right that the company has, they're borrowing money to paper it over, they're acquiring other companies to obscure the financials, buying back stock, which gets investors basically coked up and they don't give a fuck anymore about the problems that you see. So that's what, so it was really, it became so punishing. So in an environment, plus I think that I'm fond of saying now that, the lower the interest rates, the less honesty in the markets and in society. So we're in a new paradigm here. I don't know what the new paradigm is, where things finally fall, but we're going to be in a higher, at least nominal rate environment. And, and so I think that it's going to be I think it's going to be a lot less difficult to, get the timing right. Nobody was ever omniscient and knew, exactly what quarter the wheels would fall off. But you had prior to GFC, the guys who were good, they could usually get it within a few quarters. It wasn't going to be awful for them. But, I think we're going back into that environment. Actually, it does have me interested in the possibility of launching a fund that's more traditional short selling focused, where it's fundamental, a lot of fundamental shorts. It's not like
So not activists, just right. Melting ice cube shorts, put them on, or like troubled companies like the Mallinckrodts of the world, just put them on and wait for them to die.
Right. Because I think that they'll die sooner. I don't think it'll be I don't think this is going to be nearly as bad as it has been post GFC.